Hey, what's going on, everybody? It's Pete Fickeisen here. I just wanted to touch base with you really quick on a couple quick things. Number one, um, in regards to the marketplace, yeah, interest rates are all over the place. So, what are we going to do when it comes to interest rates? Well, when it comes to interest rates, we've got a couple different things brewing here. And if you're a buyer out there in the marketplace, or you're a real estate agent working with a buyer, I'd say one of the worst things that you could do is actually have your buyer pay points right now in this marketplace, without any recourse to getting any sort of credit from a seller or something like that. And what I mean by that is we are forecasting down the road, meaning in the short term Q1, Q2, interest rates to normalize. What we feel like is that right now everything is built up on this inflation number. Everything is built up on what the Fed might do, what they might not do. Everyone's trading comments and the market is just skyrocketing. Last 20 years, no war. Last 20 years, no pandemic. Those are two giant things that are contributing to what's happening right now here in America and worldwide when it comes to the economic growth and downturn that's quote unquote now expected. So, what we're looking at and all of the rate predictions that are out there is that we're actually going to normalize hopefully in the first quarter. So, while the headlights on the car are beaming on what's in front of us, we need to look down the road. And when we're looking down the road, we're looking at the sun actually rising on lower interest rates. So I really want everyone to think about that. So what are we going to do right now for buyers? Well, I'll tell you what we're going to do. What we're going to do is we are going to try our hardest to get our clients into homes with the least amount of cost out of their pocket, meaning a seller could pay points or a seller could do a buy down, um, and the least amount of closing costs. So having the seller pay that because we know what we're going to do. As a guy that's been in this business for 20 years, I know we are going to refinance you in short term. That's why 95% of the loans I've written this year have been ARMs because I know what we're going to do because of the history. Having a trusted individual like myself or someone that's been in the business a long time to give you this advice is very, very important. Your clients picking people online and rate shopping online to find every single one of those deals has points involved. Okay. Right now, business, it's okay. It's not horrible, but it's okay. I mean, we're getting by. We're out doing our normal thing. It's just the amount of volume's lower because number one, even though inventory has risen, a lot of people are not in the marketplace right now due to the fact everyone's out there saying that rates are sky high. Rates are sky high. It's the highest they've been since, 2008. So we're looking at 14, 15 years. So what do we do? Well, like I said before, we can get credits from a seller and we can make offers asking for credits from a seller. So what you need to do is if you're out there with the pre-approval right now or your buyer's got a pre-approval, you need to start positioning where you want to be from a payment standpoint. For qualified buyers, we are actually offering ARMs for conforming mortgages. That's mortgages less than $715,000, which there's a lot of. We locked a few this week. They had great credit scores. They had lower. Some of them had 10%, some of them had 15%, some of them have 20% down. But we were able to get 7 or 10-year ARMs, in the mid fives. But that was the seller offering to pay a point. So a point, just so everyone knows, is 1% of the loan amount. So if I have a $500,000 loan amount, I have a $5,000 point. A point can usually buy down an interest rate anywhere from a quarter to 3/8. So if someone offers to pay 2 points or 10 grand on a $500,000 loan, I can most likely get someone in the low fives for an interest rate. Okay. And here's the key distinction that I want everyone to know because everybody's talking about buy downs. Okay. Buy downs are usually only offered by companies for fixed rates. Okay. The fixed rate for a conforming loan today is in the sevens. When you do a buy down, you're qualifying on that interest rate. So if you're a first-time home buyer and you're putting 5 or 10% or 15 or 20% down, you have to qualify in the sevens to get the buy down of 2% or 3%. Meaning if I did a buy down, year one would be 2% lower than my 30-year fixed rate. So if the rate was 7.5, I'd be at 5.5 year one. Year two, I'd be at 6.5, and then I'd revert back to 7.5 for the duration of my loan. Buy downs are a way for me as a lender to pay down your interest rate short term to make your home more affordable or to bridge the gap. The issue is, and the issue we're coming up against, folks, is people aren't qualifying with the buy down because the rate's 7.5. Okay. So everyone's talking about buy downs. What we need to talk about is let's get you qualified. Let's put together a strategy, just like we've done for the last, let's say 4 years with this competing marketplace. Let's put together a strategy and let's work that any offer you want to make on any home, we put together the right proposal that's so the payment going in and your agent can sell it to them. So folks, pre-approvals are not one size fits all. I want to help you. I want to help your buyers. I'm happy to talk to sellers. And on the listing side, just to touch on this real quick, please, 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 please do not cut your listing price without offering seller credits to the marketplace first. There are many, many smart agents out there that are offering closing cost credits as a way to attract buyers. That is working. Build that into your plan. Call me. Happy to go through this with you. Okay. Anyways, hey, this is Pete Fickeisen, Cross Country Mortgage. Please reach out to me, 508-240-4418. I am, here when you need it. Just want to let you know, just real quick, our disclaimer, we're an equal housing opportunity lender. All loans are subject to underwriting approval. Certain restrictions apply. Please call me for details, 508-240-4418. Cross Country Mortgage, LLC, NMLS number 3029. You can also hit up NMLS if you have any questions, nmlsconsumeraccess.org or www.crosscountrymortgage.com, thefickeisengroup.com. My NMLS is 12344. You can contact me or Nick on my team. Here's that information. And listen, we want to help you guys out. There's no, there's no harm in giving us a call. I appreciate you. Have a great weekend, and hopefully you learned something from, this quick special update. Thanks.